Jimmy, hello, welcome.
Hi, I'm so
This-
sorry for the technical difficulties. I'm trying to access this Zoom call through my phone, work phone, and a personal computer, and it did not work. So I'm glad I could join over the phone.
Absolutely, glad to have you here. Thank you for being here today.
Yeah, absolutely. And Diane Williams, the co-presenter, should be on the call as well, but she had difficulty accessing the link as well. Diane, are you on?
It doesn't look like she's here yet.
She might have called in. Um,
Possibly too, yeah.
Jimmy, do you want to just go through your slides and let us know, when to move on?
Yeah, absolutely. Okay. I apologize again for the tech difficulties. We've been trying to access this for 15, 20 minutes and it has not been working. So apologies once again to everyone. Thank you for your patience.
No problem.
Well, yeah, we appreciate you being here and for everyone being here. And again, big thanks to US Bank for helping us put this together today. So why don't we go ahead and get started? Just a little introduction of who we are at Fair Credit. We're a nonprofit based out of Salt Lake, but we serve all of the state of Utah and many of the states here in the US. And our mission is to teach individuals and families how to manage their finances wisely and to improve and sustain financial well-being. And so during our presentation today, we'd ask that if you're not speaking to please mute your mic and to use the chat feature for questions, for responses, and really utilize that tool that's there during the presentation. There will be a live Q&A at the end of the presentation for any questions that you might have for any of the presenters today. And we are recording this presentation. And so if you want to, feel free to turn off your video. If that's something that you want to do, go ahead and do so. Again, my name is Talon. I'm a financial counselor here at Fair Credit Foundation. And some of our services, real quick, before we dive into things, we offer one-on-one financial coaching. So, sitting down with you and working on whatever goals that you're looking to work towards, we can sit down with you and help you towards that, as well as our debt management program, where we can work with you and your creditors to help make your debts a little bit more manageable. We have our IDA program, which is our match savings program that goes into, you can use those funds towards a few different things. We provide this financial education as well. And so thank you again for your attendance. We are continually putting out different webinars talking about all sorts of different subjects. So stay tuned for our upcoming webinars that are coming up over the next couple weeks and months. And one of our last programs we have is our Credit Gazelle program, which is a payday loan refinance program available here. And so with that being said, why don't we go ahead and jump into today's agenda. We are again grateful for US Bank and their willingness to present today. And so we have Jimmy and Diane with us that are going to be presenting about Road to Financial Wellness and how banks in general and some of the different services that they have can help achieve that. Then we'll jump into some of our opportunity accounts. That is another program that we provide here at Fair Credit. And then I'll follow up with some extra tips and information. So with that being said, I'll turn the time over to you, Jimmy and Diane.
Great. Thank you so much. And thank you again for being here. We are excited to share this topic with everyone. So we titled this The Road to Financial Wellness, especially with the current situation with the pandemic going on. I know a lot of our finances have been impacted. So we just wanted to provide enough value and information to help everyone here on this call to get one step closer to that financial security that we're all striving for. So I wanted to go over, first of all, the table of contents, just to lay out the agenda, what we'll be going over today. So we wanted to start off by just sharing some statistics with everyone. So if we look at the table of contents in the intro, we wanted to go over some numbers that might be alarming to some people, but this is around retirement, savings, debt, emergency savings. So we first wanted to provide this statistics to really help us all understand the current financial situation of the average American. Just to paint a clearer picture of where we're at, and if you fall in this category, we just want to let you know that there is hope. And that's kind of the part two, is we wanted to go over the personal finance 101. So what Diane and I think will be really beneficial to the here, to really become kind of financially secure. So we wanted to go over the two most important numbers in personal finance, in our opinion, which is net worth and cash flow. We'll go over the 50-30-20 principle. We'll go over some defensive and offensive strategies. And then we wanted to go over an action plan and automation. So the second part of the seminar today is Diane will be presenting us with some banking products and services that will piggyback on part one, what we talk about with personal finance. So we can put products and services. We wanted to introduce products and services that would be beneficial and helpful to the audience here. And also part three, we wanted to go over some of the public and private resources available. And then we'll end the call with a Q&A. So jumping right in, if we go to the statistics, 80% of Americans are living paycheck to paycheck right now. 3 out of 5 Americans can't afford an unexpected $500 emergency in cash. And 30% of Americans have less than $5,000 saved for retirement right now. So just want everyone to really think about these numbers right now. So 80%, that's over 250 million Americans are living paycheck to paycheck. Again, millions of people can't afford a simple unexpected emergency. So why is this? Why are we so financially illiterate in one of the best countries in the world? So we kind of can narrow it down to we really never received the education in our schools or our homes about personal finance. And we can see, if we go to the next slide with some of the retirement statistics, it's very alarming. Most people want to retire with 1 million plus for, at the end of their careers for retirement. But we can see from this slide on the retirement statistics that less than half of us are going to really have $100,000 for retirement. So with the baby boomers retiring right now, with the Gen X's and the millennials, we're in some dire situations where we need to act now in order for us to securely retire. And just going to the debt situation as well. If we go to the next slide if we look at the average American debt, so this shows all the generations or the cohorts of Gen Z, millennials, Gen X, and baby boomers, but it kind of shows the average debt that each generation has. So this is including credit cards, student loans, auto loans, mortgage, but we can see that we're not as financially responsible. And as a country, we're crime. A lot of these things that we see stem from the lack of money or the awareness we have. So personal finance, this subject is very important to me. I actually started a little nonprofit in a tech company around financial literacy and education because I know how much impact it can have if we're on the right track. This is not just impacting us, but our families and our future generations. So I just wanted to preface that with, just wanted to share these statistics with everyone just to see where we're at. And like I said, I'm going to go to the next slide. This is one of my favorite quotes. It says, the best time to plant a tree was 20 years ago. The second best time is now. So despite what our financial situation might be, I hope that people can learn from this seminar and get enough value that we can really act now and make the changes and pivots that we need to. So if we go to the next slide, anyone can work towards a brighter financial future. It just takes discipline, patience, and a clear plan. And that's kind of the bulk of what we wanted to go over, is that personal finance 101. And we're going to talk more about the importance of budgeting, the importance of tracking our spending, tracking our income, having a balance sheet, knowing what our assets are, what we owe, what our debt is. And more importantly, we really need to decide what drives us. We need to create a plan centered around our core values, what we want to accomplish, what are the milestones we have, and we have to lay the steps of how we can get there. But again, I hope, and we'll have a Q&A session at the end of this seminar, but I hope this will be valuable for everyone, that we can just take the actions that we need to today. So we'll just jump right into the personal finance 101. So one of the main reasons I showed these statistics is kind of just showing us the average American. And in order for us to make any changes or any improvements, we first have to discover where we're at financially. And two of the most important numbers in personal finance, in my opinion, is net worth. This is all that we own minus all that we owe. And this will give us a great indication kind of where we are at financially. There are some recommended savings amounts and retirement savings amounts that each kind of age group should be at. But this is a great indicator of seeing, are we in the negative or are we in the positive? And believe it or not, a lot of Americans are living in the negative with our loans, with student loans, auto loans, mortgage, credit card debt. We do owe a lot more than we own. But the second most important number, and this I cannot stress enough how important it is for us to really keep track of this number. And this is a monthly cash flow. This is our monthly income minus our expenses. And this number, let's say after all that we spend and all that we make, we have $500 left over or $1,000 left over. This is crucial because financial consultants, financial advisors, bankers will be able to work with this money and work as your financial quarterback and distribute this money based on your goals and your needs. So I just wanted to emphasize how important it is for us to discover these two numbers and just be aware of these numbers and keep track of it. So once we discover kind of where we're at financially, we have to plan. We have to create a plan based on our priorities, our goals. And some of the questions I like to invite people to ask is, where do you see yourself in 3 years? Where do you want to be financially, professionally? What are some of your financial short-term and long-term goals? What are some future major purchases that you want? When do you want your next home? When do you want your next car? We have to plan for these. What life milestones do you want to financially prepare for? Is it a second baby? Is it a business that you want to open? Is it preparing for a wedding? Is it for retirement? So after we discover where we're at financially, it's crucial for us to plan on where we want to go. So if we go to the next slide with the defense and offense. So once we have a plan, a short-term plan, a long-term plan of where we want to be and what we want to achieve, we really have to take into consideration the defensive and offensive strategies of personal finance. I'm a big NBA, NFL. I love football and basketball. And from championship teams, we know that defense wins championships. And that's pretty similar to personal finance as well. We really want to work on the foundational piece of defense first before we move into the offensive strategies. And the number one step of defensive strategies is having a budget. It's really, like I talked about, is understanding and discovering where we stand financially is crucial. And number two, we'll dive deeper into this, but this is one of the most important personal finance vehicles that we have is emergency savings. We'll dive deeper into this, but I cannot stress enough how important it is for us to have 3 to 6 months emergency fund saved up of our living costs. If we're spending $3 grand a month, we should have at least $9 grand saved up for unexpected emergencies. Part three, number three of the defensive strategy is debt elimination. I've opened a business, I've been in hundreds of thousands of dollars of debt, and I can tell you this weighs on you so much. This is all you can think about when you're in this situation. There's a hole that gets bigger and bigger and you feel like you can't escape. But there is hope. If you are in debt, there are different strategies. Like it was announced earlier, Fair Credit, they help out with debt consolidation. They help you get the consultation that you need to figure out a plan of eliminating debt. And that is the third pillar of defensive strategies. And fourth is insurance planning. And we'll go in deeper into this, but if we just have a defensive strategy set up, any unexpected event, we won't be derailed too much financially. In the offensive strategies, we'll talk more about retirement, major purchase, wealth accumulation, and tax strategy. So if we go to the next slide on defensive strategies, plan for unexpected events in life. So the reason why emergency savings is so important is there's only three really main ways that we can lose our income. The number one is through a job loss. Number two is through a medical injury, illness, sickness. And the third part of the way we can lose our income is death. So once we have the emergency savings, and we can see this from the pandemic, a lot of us have been furloughed, a lot of us have lost our jobs and struggling financially. But imagine what it would mean to a family if they had 6 months of their living expenses saved up. How much of a cushion that would be, of a relief that would be as a father, as a mother, as a breadwinner of the family. So unexpected events, I can't tell you enough. Emergency fund, like I said again in the statistics, 3 out of 5 Americans can't afford a $500 emergency in cash. So if we do have that defense, if we do have the emergency fund, any job loss, it takes on average, most people can try to find, I know we're in a unique situation, but given a normal circumstance, most people can find a source of income in 3 to 6 months. If there's a medical injury or sickness, a lot of the times 3 to 6 months is a great time frame that people will be able to recover. So I just hope that people can see how having an emergency fund can really help you out. And the recommended amount is, if you are an employee, it's recommended that 3 to 6 months of living expenses is saved up. But if you're self-employed or a 1099 independent contractor, it's recommended to have 6 to 12 months of living expenses saved up. Okay, so let's go into the next slide, the debt elimination plan. So it's going to be really important, again, that discover that first step of personal finance. It's going to be important for us to really calculate the debt balance we have. So all our credit cards, medical bills, student loans, mortgage, it's going to be important to get the exact balance and also the interest rates and a better understanding of how much we're paying on the minimum payments each month. And the reason why we need this is once we have all the information about our debt, we can create a specific plan that we can start implementing, whether it's paying off debt with the highest interest rate or the lowest balance, we can create a strategy where we can knock one debt at a time. So once we pay off one credit card that we've been paying $100 minimum into, we pay that off in 2 months. We're going to use that $100 that we paid our credit card off with to another loan or debt we have, and it's just going to pile on. So once we have a plan, we're able to really knock off the debt we have one account at a time. But another method, especially during this situation, during the pandemic, we know that interest rates are lower and there's a lot of promotions going on. Diane will talk about this and give you a specific case study, but it would be really smart for us to find a low interest rate or 0% interest rate and consolidate our debt. So again, this is one of the pillars of defensive planning is we really need to create an emergency plan, an emergency savings, and a debt elimination plan. So like I mentioned, if we go to the insurance plan now, slide, so there's 3 ways of losing our income: job loss, medical, and then death. So insurance plan, this is so crucial for us to have the proper amount of insurance and policy and right amount of benefits. So auto insurance, home insurance, health insurance, these are kind of the more commonly talked, more discussed insurance policies that we need. Imagine if we got in a car accident, didn't have insurance, how much we would have to pay for the property damage, the medical bills for other people. You know, we talk about the importance of this, and it is crucial for us to have these policies, but not a lot is talked about with disability or life insurance. So disability insurance, your company, your employers will have some form of disability insurance policy, but it is recommended to just really look deeper into this to analyze what coverage we need. We protect our homes, our houses, our valuables, but why aren't we protecting our income that pays everything else? And this is kind of what disability insurance is. We talked about one of the ways we lose our income is illness or sickness or injury. Disability insurance, if we can't work for 90 days or more, they'll cover around 60, 70, 80%, depending on your policies that you have, to cover your salary, your wages. It won't be 100% replacing your what you bring in, your income, but even having that 70% of your income while you recover is going to be crucial. Life insurance, I know it's not the most exciting subject to talk about, but there is still a 3% chance of an average working American dying before age 65. And as a breadwinner of the family, if you own a home, if you own a business, if you have a significant other or children, it's crucial to secure yourself with a proper insurance. So around $50 a month will be able to secure you hundreds of thousands of dollars in term insurance, just for you and your family to know and have the assurance that if anything were to happen to me, my family's covered. So this is, in summary this is the pillars of the defensive planning I wanted to go over and the importance of it. And we'll jump into the offensive strategies. And I know there will be a lot of questions, so we can kind of save that at the end, but please take notes and please kind of message the platform on Zoom if you have any questions, and we'll make sure to address it. So defensive strategy, if we have emergency savings, we have a budget, we have the proper insurance, we have 3 to 6 months emergency fund, we have a debt elimination plan. No matter what life throws at us, we won't be too derailed of our financial plan. And that's why, again, defense wins championships, the same with personal finance. A lot of us on this call probably won't have all those pillars of defensive strategy set in place. And I recommend that you guys look into that, seeing what your gaps and holes are and see what you can change and improve on. So moving on to the next slide with offensive strategies, it's not too late to start now. And many of us, might go behind with retirement or savings, or we're hoping for a better kind of financial situation with our net worth or cash flow. These offensive strategies is really the concept of money making money for us. And the pillars that we talked about in the offensive strategy starts with retirement. And I wanted to go over how the number one way we can become millionaires is through our employee-sponsored retirement plans. Really utilizing our employee match for our 401k, 403b, Roth 401k. It's going to be crucial for us to really examine. This is free money here. This is free money. So whatever the employee's match is and your required contribution is, contribute enough that you're receiving the match from your employee. Okay, take advantage of the match. I'll show you this chart. I wanted to show you the power of compound interest, and many of us are familiar with this, and we've heard this over and over again, you know. But the late saver will really never catch up to the early saver. If we go to the next slide, I can show you the power of compound interest, or the snowball effect. So even if we are in our 40s right now or 50s, it's not too late to start. We're living much longer lives. So if we are in that category of, you know, less than 30% of us have less than $5,000 saved for retirement, there is hope, but we really need to start now. But let's look at Jack, for example. He invests $200 per month starting at age 25 until he's 65. So he's contributed a total of $96,000, but when he retires, he has over $500,000 just by putting $200 a month into it. Jill, she starts 10 years later. She invests at age 35, but we can see she has less than half of what Jack has at the same, at retirement. And Joey, he started at 45. He contributed 48,000, but doubled. It's at more than double. It's at 100,000. So really, if there's one thing that you can get from this seminar, start now. Start now. So a lot of these accounts I'm going to show you with the offensive strategies of accumulating wealth, we can utilize compounded interest. So if we go to this next slide with the tools to accumulate wealth, I wanted to go over some of these accounts that are going to be really helpful for you to accumulate wealth. And I am not a financial advisor, so I'm not going to recommend this. I'm just going to share this information with you guys so that you guys can do your research and make sure that you are selecting the right vehicles for you. So I know we've heard of health savings account, but this is where if we have a high deductible insurance plan, we can create a savings account that is used for a purpose of any medical, anything related to medical, whether it's prescription, glasses, surgery, even sunscreen, we can use this. But this is called a triple tax savings account because everything that we contribute, let's say I contribute $3,000 into the HSA, I can deduct this from my adjusted gross income. Let's say I'm making $53,000 and I put $3,000 into my HSA. My adjusted gross income AGI is now going to be $50K. So there's a tax benefit of tax write-off there with our AGI, lowering our AGI. Any health-related, any medical health-related purchases or expenses are tax-free. That's the second component. And if you invest your HSA, any of the capital gains, you do not have to pay taxes on. And there's a cool thing about HSA. There is a penalty if you use your health savings account before retirement. But after age 65, you can use this as a retirement account as well without any penalty. So the number one expense for retirement is our health expenses. So this is, you know, hit two birds with one stone scenario where we can use this as a health savings, but also as a retirement tool later on. Roth IRA, we've heard a lot about this. So Roth IRA, this is something that is a little bit different than a 401k. How the tax works is different, how the limit's different, the limit contributions are different. But this is one of the best vehicles that we can utilize. The Roth IRA is the individual retirement account, but the tax benefits are pretty amazing. So let's just give a quick example of an apple tree and an apple orchard. Regular 401k works how a farmer has an apple seed. He's not going to be taxed on that seed, but after he plants it, waters it, gives it nourishment for 30 years, when there's a harvest, Uncle Sam is going to tax us 20-30% of the withdrawals on the 401ks or IRAs. But a Roth IRA, in contrast, works as the government is going to tax the seed. So after we plant it and harvest and nurture our orchard, during harvest time, we're not going to have to pay a dime in taxes. There's also a lot of benefits with the Roth IRA. Any of the retirement accounts or vehicles that we use, if we break this, there is a penalty in it. But if we've had a Roth IRA for 5 years, we can use the funds that we contribute into it without any penalty. But before 5 years, we will have to pay a penalty on this. But there's just so many vehicles that we have with health savings, Roth IRA, stocks, bonds, ETFs, annuities, investment properties, alternative investments that we just need to really learn more about. Again, a lot of these vehicles, we can utilize compounded interest, but it's going to be important for us to really understand what these vehicles are and how it can benefit us. So part of the offensive strategy is, like I talked about, retirement, it's wealth accumulation, tax planning. So we really have to understand how the tax implications on these vehicles as well and really plan for it, because we pay 20-30% of taxes, right, of our salary. So we're pretty much working 2-3 months for free for Uncle Sam, and we really have to find strategic ways and efficient ways to kind of lower that as well. And that's what kind of financial advisors do, or the financial consultants will be able to help you with. Well, so I know we covered a lot of information. There is a principle, there's a kind of a golden rule in personal finance called the 50-30-20 principle. You can go to that slide. This will help us kind of give us a better direction of how we need to distribute and allocate our money. So it is recommended that 50% of our living costs goes, 50% of our income, our kind of that cash flow that we talked about, goes into our home, our groceries, cars, bills, anything that is helping us, supporting us to live. That's the 50%. The 30% is our fun money. So this is for traveling, for shopping, for our hobbies, dining out, gifts. 30% should be allocated for our fun money. And the 20% is recommended that we save around 20% for retirement, but I put in the category of debt elimination and investment as well in here. So 20% should go into paying off our debt, investments, retirements, major purchases. There's a term called FIRE, financially independent, retire early. If you want to retire early, reduce some of your living costs. Maybe spend 40% and put another 10% in retirement. Deduct 10% from your fund money and put another 10% in retirement, and all of a sudden we're saving 40% of our income. So this is just a guideline that's kind of the standard of personal finance. But again, we can adjust these ratios based on our core values and our situation. So another thing that's going to really alleviate some stress, money is something hard to manage. It's hard to keep track of. We have the digital tools. We have the ability to automate our finances. You can go to that, the next slide. It's going to be crucial for us to discover where we're at, create a plan, allocate a certain amount with a 50-30-20, and automating our finances. is going to be key. So simplify your life by automating your bills, your savings, your debt, and investment. So with that, we went over the the defensive and offensive strategies. We went over some Finance 101 principles. I hoped everyone learned something valuable. But now we're going to pivot, and I'm going to turn the time over to one of our branch managers, Diane Williams. That's going to talk about specific products and services that can help you discover your finances, plan, and help you reach that next step of financial security. So I'll turn the time over to Diane.
Okay, thank you, Jimmy. Am I okay? Can everyone hear me?
Yep, we
can
can
you
hear
me,
you.
Jimmy? Okay.
Yep. Yes, we can hear you.
Perfect.
Thank you.
Awesome, Helen. Thank you. Thank you again for having me. So how can U.S. Bank services and products help you? So, well, if finances weren't stressful already, add in a pandemic, right? And here we are. Many of you are probably attending this workshop to seek additional resources or just find new ways to navigate your finances. I could tell you, U.S. Bank, we can help. So slide 20, if you've been financially affected, you are not alone. We have solutions that could possibly help you during this difficult time. On our personal banking solution side, as many banks, we have checking accounts, savings, debit cards, credit cards, overdraft protection, the mobile app, which is changing the banking industry for sure. Newer feature we have is co-browse. I'll get into that a little bit later. Goal setting, appointments making, mobile check deposit, I like to call McD, bill pay, and financial insight that the banks have available to kind of just explore different tools, guidelines on learning more about credit score and what that means. On the next slide, checking account. Checking account is where you store the money you need for day-to-day expenses and paying bills. Let's talk about all the great ways to use your checking account. Again, we have the online and the mobile app, mobile banking, putting money into your account and taking money out of your account. Probably safe to say it has never been a more important time to have a bank account. COVID-19 pandemic greatly has increased the importance in having a very safe and affordable bank account and being able to manage your money remotely, including receiving wages from the government, from benefits, securely through direct deposit and making payments remotely. Next slide, online and mobile banking. Online banking lets you conveniently manage your finances from your computer and, of course, now your phone, securely and electronically, saving you time to do the things you really love to do. With online banking, you can view balances real time. You don't have to, back in the day, we had checkbook registers to be able to see where you're at, what checks you've written. Of course, online banking has changed all of that. We're able to transfer funds, manage and pay bills, and even receive electronic statements and so much more. Next slide, exchange money with friends and family. So online and mobile banking, it's easy to send and receive money using P2P, person-to-person payments. Many financial institutions are offering P2P feature called Zelle, short for Gazelle. So Zelle is just that speedy way to transfer money. You could send money to friends and family using just their email address or phone number. Transactions usually complete within a few days upon enrollment, and then after you're established, money is instantly transferred in seconds. Money travels directly from account to account and no stops in between. You can use P2P payments instead of cash or checks to settle up with friends. I personally love Zelle. I hate when people borrow money and you're like trying to track them down. Hey, you owed me $20 from 2 weeks ago and I lent you, it's just those awkward conversations, maybe confrontations a little bit easier for others, but Zelle's nice. You can request the money, you could send the money, and it's free and super secure. So every bank pretty much has the ability to send money with Zelle. Some of your smaller banks may not have it on their online application platform, but if you just go to zellepay.com, then you'll have access that way. But it's a free service for consumers. It's just a great vehicle to be able to transfer money. On the next slide, we have deposit checks in a flash anytime. This again is the McD, not the golden arches, but it's our mobile check deposit. And in order to do that, all you need to do is go to your mobile app, choose an account, enter the amount of the check, sign the check, take a picture of the front and back, verify the information, and hit submit. So the times of rushing to the bank to try to make that check deposit, getting there 2 minutes after doors are closed, mobile check deposit eliminates all that. You'll have the freedom to be able to accept a check, take a picture of it, and it goes right into your account that same day. Super awesome feature, and again, secure. On the next slide, I'm talking about, both online and mobile banking can also help you stay informed of activity in your account. Set up text alerts to let you know about deposits, withdrawals, low or negative balances, payments coming due, and more. This pretty much is life-changing. Again, I mentioned we had checkbook registers previously, soon to be archaic at this point with the online banking. But knowing when your balance is going to hit, if you set it up $10 or less, you'll get a text alert. Or if you get a text alert saying, hey, your card was just used at Smith's for $500. Well, no, I didn't do that. So that immediately lets you know of fraud that's happening. So real time, just the advances that we've made to be able to monitor our accounts in a safe environment, again, right at your fingertips is pretty phenomenal. Banking has come a long way.
And Diane, can I just say just something real quick? The reason why we thought it would be important for us to share these products and services, especially the online tools, is because 90% of anything that you do at the bank can be done through online and mobile banking now. And again, the number one benefit that we see from banking going digital is number one benefit that people say is a greater awareness of their current finances. So we really wanted to kind of just do a kind of quick version of all the banking products and services out there so you guys can discover again, discovering where you're at financially, where you stand, and to plan of where you want to go. And these tools will really help you get there. And Diane will go over some of the specific products and some case studies. Sorry, Diane, back to you.
Oh, you're fine. No, great point, Jimmy. So I'm on slide 26, and on the next few slides, I'm just going to be talking about products that are a little bit tailored more to what we're going through right now as far as the pandemic that we are in. So here we have ReliaCard. ReliaCard is offered in many states, offered through U.S. Bank as a secure alternative to issuing paper checks for unemployment benefits. Funds are automatically deposited into this reloadable prepaid debit card. You can always get more information at usbankreliacard.com. This card is beneficial to someone who doesn't have an account, maybe someone who can't open an account right now, but doesn't want to wait for snail mail, doesn't want to receive a check in the mail to have to try to find a way to cash or negotiate it. ReliaCard is nice because this is obviously a Visa card that sits right in your pocket. You're able to do cash advance, use it as a Visa, and take money out of your account. So special product that we have, again, you can get more information at usbankreliacard.com, but it's just a great way to receive some of these electronic deposits coming in without necessarily having a checking account. So highly beneficial for some of our audience, who don't have that account. Next slide, I have U.S. Bank Safe Debit Account. which is another bank on account that U.S. Bank offers. It's a safe and affordable bank account, helps you keep control of your money. The main feature of this account, it does not allow for overdraft fees. So the low cost on this is $4.95, so less than your Starbucks coffee. It allows you to have a U.S. Bank debit card, the online and mobile banking, the McD, that mobile check deposit, bill pay, and more. Again, no overdraft fees, which people who hate bank accounts will probably say they hate accounts because of the fees. So this is ideal for someone who doesn't ever want to have that surprise, the unexpectancy of a fee that can snowball into multiple fees. And this is just a great way to monitor it and allow an account without, disruption and the impact that fees can accrue on an account. Pretty devastating in some cases, right? This account also allows for free credit score access, helpful credit education, information, and resources, all available, again, online. U.S. Bank Safe Debit account is pretty phenomenal as far as having an account and kind of eliminating those fears. Next slide I have is savings withdrawal limits. So purpose of a savings account is to save, and then in place is Reg D, which monitors and restricts the amount of withdrawals you do on a savings account, because again, purpose of a savings account is to save, so not to touch it. So if you were to do multiple withdrawals and it exceeds that Reg D limit, then there will be charges, $15 per in excess. So it's not uncommon prior to COVID that someone were to do multiple withdrawals from a savings account and get hit with like a $45 or $60 fee. Pretty outrageous, but again, it's federally monitored and regulated. And the purpose was just to maintain that it's a savings account. So reflecting regulatory changes made by the Federal Reserve, we are removing the limit on the number of withdrawals and transfers on customers' accounts that they have with U.S. Bank, suspending any related or excessive withdrawals. So point being, you can make as many withdrawals right now on a savings account and there's no additional excessive fee. So like Jimmy mentioned, for the defensive and eliminating debt on the next slide of 29, I've kind of gone over just some personal checking solutions on the consumer end. I also wanted to bring up just promotions that are out there. Right now, 0% is a great rate. So, someone who is experiencing debt, it is just an awful feeling sometimes, and it's suffocating, and it could be, right now with the pandemic, people are depressed. They're looking for solutions or answers. So here is a possible solution. So the 0% credit card is offered from U.S. Bank, and it's for 20 months. And I've been in the industry for a little bit here, and I've never seen a 0% offer for 20 months. So that's awesome. So to be able to gauge a plan, to be able to plan out finances on a 20-month term instead of just like a 6-month or 12, it kind of gives you the ability to make those adjustments. So I have a case study here on page 30 that talks about Mr. and Mrs. Jones. This is your typical neighbor, friend, associate who has $20,000 in debt. That can be from medical, credit cards, loans. Average interest rate I've calculated into this example here, 22.5, but we all know that that could be much, much higher in other instances. But for the sake of this example, I kept it at 22.5. You got 20,000. You multiply that by the interest rate, which equals 4,500. Take that amount, divide it by 365, and then 30 days. That gives you the interest that Mr. and Mrs. Jones is paying on a monthly basis. So $369.86. That's interest only. That's not extra additional food on the table or money towards a savings account. That is just interest only. And then, of course, you have to add in the principal, and that's about 1 to 2% of the outstanding balance. So on $20,000, that would be about $400. So total on Mr. and Mrs. Jones' $20,000 debt, they are paying $769.86 a month. And gosh, what a large amount, especially during this time. If you're trying to make rent, trying to pay yourself and put money away, or again just putting food on the table. So 0% credit card, the cost of putting that balance on a 0% credit card would be about 3%. So that's $600. So $600 seems like, it's kind of a hefty fee, but if you look at what they're paying monthly in interest, that $369.86 is a monthly fee, a monthly interest fee that they are paying. So if we were to convert that over to that 0% credit card, on slide 31, you'll see the savings that Mr. and Mrs. Jones would experience, a savings of $6,831. That is a car. $6,831 that could be added into their savings account. That again is for 20 months. So might it be difficult to pay $20,000 in 20 months? Yes, probably so. But during that 20 months, why not take advantage of that 0%? And maybe the debt's not $20,000, maybe it's 10. So it's definitely doable to do in 20 months, but everyone's in their own situation right now. But just wanted to highlight this quick example of what one would save in that interest a month. It's pretty unbelievable. It's $6,831. So I have actually a solution B. This is a debt consolidation loan. Same scenario, Mr. and Mrs. Jones, $20,000. So instead of doing a 0% credit card to pay it off in 20 months, maybe a debt consolidation loan that U.S. Bank offers, 4-year loan. We actually have a 3, 4, 5-year term, but I just chose for this example 4 years. So say they just want to knock out this debt, $20,000 in 4 years. The interest rate is 8.49, so not quite as low as 0%, but definitely not quite as high as the 22.5. Mr. and Mrs. Jones would pay $492.87 a month and knock out this loan in 4 years. They would be saving that $277 a month because that previous payment was well over $760. So I'm throwing out a lot of numbers right now, but the point is to see that although $20,000 in debt could, take you to a payment around $770 a month, there's options out there. There's promotions. There's even calling your lender to see what you have the ability to do. Maybe you have the ability to delay your payments for a few months. I know they're doing that with mortgages, but it just all takes, effort and steps and just mapping out a plan. But those are the two examples I had. And the next slide I have is business banking resources. So I know I covered a lot on personal. We definitely have so many options on business as well. So each bank, U.S. Bank, we have what are called CRCs, so they're consultants and business specialists. At every single branch, we have these type of experts that can assist with our checking accounts, business credit cards, no matter where you are in your business cycle, whether you're just startup or you're during your expansion stage. We've got treasury management, which is just a very sophisticated one-stop shop to be able to handle all your wires right from your office computer or even from your phone. Merchant services, because of course we're in a more cashless society right now. We definitely need to accept payments as business owners, but having a bank to be able to provide you that. I know U.S. Bank owns our merchant services, so if you were to accept a credit card payment, that payment would post that night, and you'll have access to it pretty much immediately, instead of like a 2 to 3 day delay. And of course, we have equipment financing, business lending. So I've mentioned so many options of what we have. How do we do that in a very social distancing world right now? We got to stay 7 feet apart. We do that with appointments. We do that with co-browse, which is a one-on-one feature where you can be at your, at home, logging into your app and needing a banker to assist. And maybe a phone call would be helpful, but what would be more helpful is that your banker can log in right in with you on your app and point and direct you where to go, maybe how to apply for that loan, or give you side-by-side examples. So it's a newer feature that U.S. Bank is offering. It's been a hit, co-browse, to be able to have that banker guide you while you're doing your transactions online and just help navigating. And that is what I have on the personal and business banking side, and I'll hand it right back over to you, Jimmy, to finalize any other comments or open it for questions.
Yeah, I know we're a little, it's 5:01 now, and I apologize again for the tech difficulties, but I guess we can open it up to the floor and see if there's any questions or any comments.
Thank you. Yes, let's turn it over. If anyone has questions, to please go ahead and put them in the chat, or if you want to unmute yourselves too, we'd love to hear from you that way as well.
Hi, everybody. This is Marcia Romero, and I'm with U.S. Bank also. I was just wondering if you guys could talk a little bit more about, when folks are really, especially now during COVID, when so many families have been struggling, and it's really sometimes hard to save money and to stay on the budget because you feel like so much money is going out as quickly as it's coming in. Would you talk about, ways to utilize community resources to maybe help your budget stay on track so that, someone could stick to their budget, trying to save some money, even during a hard time that we're all going through right now?
Yeah, absolutely. And that's one point we wanted to make, is we really, like I said in a previous slide, knowledge is power. It really is trying to understand what the resources are out there, both in the private sector and the public sector. For example, I think the IDA was brought up. This is a great opportunity. There's so many different programs and grants out there, but I'll just give 2 examples. The UIDA, the Utah Individual Development Account, there is an income restriction to it, but most people, most college students, most people that are struggling, living paycheck to paycheck will qualify for this. But it's a 3-to-1 savings match account, where if you save $62.50 a month, this program is timing that by 3 and depositing that into your savings account every single month. So there's so many different programs out there, and it is tough going through this unexpected pandemic, and we are hit financially in many aspects. But again, that's why the defensive planning is so important. Imagine if these people that got furloughed or were jobless kind of put in the time, made the preparations, and have 6 months of living expenses saved up. Of course, that's the ideal situation. And if we don't have that emergency savings, I cannot stress enough how important that is to get our defensive strategies in place. But for us to get there, there are different programs and grants out there that will be able to help us, like the UIDA. There is another one by the Salt Lake City Economic Development going on. I know if you're a business owner, there's a $25,000 grant that you can apply for to kind of change the facade or the what do you call it, storefront, you know, that's $25K for business owners to improve their facility. So there are programs out there, believe it or not. There are many resources, nonprofits. The Women's Business Center is another one. There's a lot of business incubators out here that will be able to help you kind of navigate the different programs. There's a lot of nonprofits that will help you. But again, knowledge is key. Knowledge is power, and people like the AAA Credit Foundation, Fair Credit Foundation, there are nonprofits. So really utilizing those resources is something I can recommend. But again, getting our defensive strategy is probably the number one thing that I'm going to recommend that we can work on. Hope that answered your question a little bit, but is there any other additional comments or questions that we have?
Yeah, I have one. My name's April, by the way. I work with consumers who have disabilities. Obviously, they're low income, and I'm glad you brought up the UIDA thing because it kind of helps me on my job. But my question is like, because I don't know what accounts they have for bank and stuff, and sometimes they share that information with me and some of my coworkers. But my question is like, would you guys have forms available that we can print off to help assist? Like, well, not myself, but if other people like ourselves, and then those who are disabled to be able to help get them squared away, because that's obvious that they're all low income. They're not going to have a savings because they're on SSDI.
So is that a specific question regarding the UIDA? Is how we can get that to your to the people you work with? Is that the question? Yeah, I'm sure Fair Credit can help you answer that. There are different programs. I believe it's every other month. I believe they just had a UIDA, but there is a registration process. I believe you do have to take a personal finance course for 2 days and hit the income limit. But maybe that's something that Ellen or someone from Fair Credit could help answer. But there are definitely ways that I'm sure that we'll be able to coordinate something.
Absolutely. Thanks, Jimmy. This is Ellen. I just will jump in here. April, I put in the chat, if you want to send me an email, I'd be happy to send you information on some of our specific programs, the IDA program or any other programs you're interested in. You can email info@faircredit.org or me directly at ellen@faircredit.org. Sorry to interrupt you, Jimmy.
No, not at all. And April, again, U.S. Bank, we have the resources as well. We have we have CRCs, our consultants that can be able to really help navigate things and recommend the best products and services as well. I know, there are with people with disabilities, there are limitations that come into the branches, but that's where I think, as Diane explained to us, there are so many digital and online tools, and also professionals. We have some amazing professionals that can help anyone out, and especially during the unique situation. So if Ellen, if you could even type in my information, jimmy.choi@usbank.com, I'll be happy to set any appointments up for you guys or even answer any specific questions that you might have.
Sure, you got it.
So with
Jimmy.
that said, yeah, any other questions, last questions we have, comments? Okay, I'll turn the time over to Ellen for credit.
Well, thanks everyone. This has been super helpful. We are just here to help you out. If you have any other additional questions, please reach out to us at info@faircredit.org, or you can reach us by calling 801-483-0999. I'm going to type that into the chat. That's our number, 801-483-0999. you can reach us there, and we'd love to be able to help you out during this time. That's why we're here. And again, stay tuned to future events. We have a bunch of exciting events coming up, and so you can visit our website, faircredit.com or .org, excuse me, and look up the next coming events. So thank you again for your attendance here today, and we hope that you stay safe and join us next time.
Thank you.
Thank you.
Thank you.